So here's what we're watching, and we'll get to the weather and China. Will tell us a little bit about those resource issues. So here we have, if pro is the opposite of con, what's the opposite of progress? Come on, that's funny. Wow, we need to wake up here. There's coffee. You can stand up and go get coffee anytime you'd like. Paul Harvey, that's the rest of the story. So the whole point is, Congress can totally mess this up. They can do something fantastic here, or they can completely screw it up. And it is in their power. The question is, do they want to be reelected? Do they, and how much do we believe, and somebody asked me this the other day, is, so Obama doesn't have to get reelected again, but he has to work on his legacy. And he's going to want, I'm almost embarrassed to say this wasn't me, he's going to want to get the big paychecks for doing speaking when he's done. So who writes the biggest checks for speaking after you're president? Which corporations? Wall Street does. Wall Street does. He's not going to want to piss off Wall Street now, right? So there's going to be a negotiation. There has to be a negotiation. And both sides have got to come in a little bit. And that's just the way it's going to be. But a lot of it's going to do political action. That's the number one thing, and that's in the near term. And then they're going to kick it down, they're going to kick the can, they're going to kick the can, so expect a lot of that motion. Sentiment. It just depends who you talk to. The range of outcomes is tremendously wide. This goes back to that bell curve that we looked at. So sentiment could go one way, it could go the other, and all the emotions around this are totally reasonable. Geopolitical risks. So this has been an ongoing issue, here, and we're going to talk a little bit about it, but right here, what's this? The Strait of 17% of global oil goes through there. And, we have, saber rattling, and it's been going on for years, and that could flare up. And if that flares up, you're going to see oil prices spike, and you're going to see the S&P collapse. So we can't count this out. So and this is another issue, but we can't count this out. So Draghi, Bernanke, Japan, they are all going to print money. They're going to print and print and print and print because inflation is the best way to get out of debt without raising taxes or cutting expenses. So we are going to see this. This is a silent tax on everybody. How does it work? We deflate the value of a dollar, which means that 5 years from now, 10 years from now, the goods that you rely on today cost twice as much. And we have done this before. We look at the numbers coming out of World War II. They're different numbers, right? They're bigger numbers. They're due to expenses in different areas. But it took us 15 years to double the price of everything. So inflation is a real challenge. And it's something that when you're looking at long-term retirement income, inflation is the biggest problem. It's always there. It's always been there. It's not that it's new, right? So it's something we have to be aware of constantly. Okay. China. China is, so this here is percentage consumption by commodity in China. So the percentage of world demand by commodity of the Chinese economy.
70% of all the corn in the world.
Exactly. That should be mind-blowing. We talk about corn and using corn in fuels, right? Ethanol, and that's a problem. That's not the big problem. It is a big problem, don't get me wrong. I think that's silly, but this is the thing we have to be careful of. And iron ore and soybeans and lead and aluminum, copper, zinc. These are all massive issues. And so weather is going to be one of the driving things that we're going to have to deal with. But here's the idea of energy being more prevalent here. This is what's happening. So Chinese wages relative to US wages. This is increases year over year. And this is the outsourcing movement. The outsourcing movement is in decline and almost to reverse and become an insourcing movement. Why is that? Shipping is expensive. Labor is, when you add the shipping costs, labor is cheaper here, or getting cheaper here. And energy, which is the second largest part of a business's expenses, after labor, it's energy, that is getting cheaper here. Productivity here is so much more. And that's unit of production, cost per unit of production. We are so much better here. And if energy keeps skewing in our favor, we will have insourcing. We will manufacture things here and ship them elsewhere, rather than manufacturing and consuming here. We can become a more export-driven society, which is interesting, right? Because that's not how we think of ourselves, which is a huge potential power for the US, which is also why when you think about portfolios, and I talked about this last year in this meeting, I said, ooh, I'm looking at Europe, and I didn't buy Europe. And the US outperformed Europe. And I think that might happen again. I'm still looking at Europe. I still want to buy Europe because it's important to have that balance, but I still think the US is going to outperform Europe, so I haven't done it yet. Okay. Energy revolution, we kind of just talked about this. This is not just natural gas and fracking. This is oil. We'll be the largest oil producer in the world by 2020. That's the prediction. And other places, the Middle East, their production is declining, ours is increasing. So that's fantastic for the commodity that's in as much demand as that commodity is, but you burn oil, you create other problems. So we still have to do the other things. We still have to have the wind and the solar, et cetera. We've talked about this for a long time. This is, our own, ourselves, this is corporates, there is so much cash out there. And I think as long as there's insecurity and uncertainty, that cash stays. When we have some more certainty, which means the fiscal cliff thing goes away. Or Europe finally says, you know what, Greece, you're out. Or here, let's bail you out. Here, we're just going to forgive half of your debts to make it possible for you to stay in. When they resolve the issues, that removes the uncertainty. When it removes the uncertainty, businesses are more likely to invest and feel comfortable investing. That's the importance of that confidence that we constantly talk about. And here it is, weather. So my folks from South Dakota, my uncle owns a ranch. He owns a ton of land. He grows wheat, and there's nothing growing. Right? It's awful, which means food prices are going to be higher, and that's actually a cycle that continues, and that's the weather cycle. And I can't predict it. I don't know what causes it. I just know that it's not good. And let's see here. 2012 was massive drought. It's going to affect the agricultural industry for a long time. We've seen the price of cattle now is skyrocketing. And I remember 2-3 years ago, I was looking at commodities and which commodities do I want to buy, and cattle just does nothing ever. It just always is stable. It never goes up, never goes down. It's just a very stable thing. And now cattle prices are going up in a big way. So finally, stop watching CNBC. That sort of goes without saying. Does anyone here watch CNBC for anything more than entertainment? Okay, we can skip that. So everyone remember what this is? So I coach soccer. I coach 8-year-old boys, and my team gave me a shirt, both myself and my assistant coach, that says, "Keep calm and play on." I didn't know the history to it. But then somebody saw me in it and sent me a link and it's on my Facebook page. So you should, if you have any interest in the history behind this, it's actually very interesting. Keep calm and carry on. Yeah, or just through the whole thing. It's basically patience. Stick to it. And that's that. Thanks, everyone. Thanks.